Hey folks, welcome to another weekly market forecast, Forex and a couple of futures that I'm looking at here for the week of Monday, October 1st to the 5th. So a couple of things right off the bat here. This one here that you're looking at is the US dollar, and been having some interesting price action on the US dollar. So I'll just real briefly, price ran up out of this big consolidation area, got caught up in another one, briefly popped its head above here, only to come right back under and scoop up some levels under here, and now we're right back up into the middle of this range here. So pretty interesting. Price on this chart anyway just got below the low under here, so the stop was taken by maybe about a pip or so. They may leave that just like it is, or they may want to come back under, and I was looking at these two equal lows under here is for price to potentially come back down and run under. May not get that. We'll see what happens though. We should have some pretty major resistance up in here. So at the very least, you have price, and I'm kind of looking, you see at this, I'll just zoom in here a little bit, this consolidation range in here, how price ran up, came back down, ran back up again, and then ultimately finally came back down. If we look at that and we look and say, well, okay, that's roughly the bottom of that range, let's say right here. See how these equal candles come in there. This candle low coincides this body here, this candle low there, wick low I should say, and then this wick high here. Ran back up. That should be some pretty major resistance. So here's what I'm sort of looking at on the daily. We'll call that one an even 95. Get that here. Okay, I don't want to see price come up any more than 95. It could stab up into it once, but I don't want to see price close. I don't want to see a big green candle close above 95. If that happens, in my opinion, then I believe we're probably going to start running out the highs above the market up here, and then we'll be back to the bullish trend again. And this was just a brief run to grab some stops below the marketplace, mainly the stops underneath here. For the most part, this one pip run I don't think was very significant, but that's what I'm looking at. So we'll be seeing what's going to happen early on in trading. If we see price start to run higher, we'll know that they're just going to, the bulls are back in control of this market, and that we're going to see a nice big push up. Now, if price, and this is what I think is probably going to happen, more than likely, again, we have hit some resistance in here, I believe. We'll probably see price come up, and I'm hoping it'll peter out and come back down again. Now, what may happen there, I believe there is a fairly significant level of resistance, support at these levels back down in here. So see where this consolidation level is? Price just trades in between consolidation levels, as you can see. And so I think that we'll probably end up seeing price just start to fall over. And then what my interest is really going to be is if we have any interest in going below the 93.90 level, and then starting to continue back down, and then eventually scooping under these lows here. I'd like to see how the week develops off and see what we can do here, but that's what I'm going to be watching. So again, just a quick recap: if price breaks 95, we'll be looking for these levels up here to get run. But I think we're probably going to see price start to fall, get softer, and we're going to fall back and recapitalize the 93.90 levels in here. And where it goes from there, we'll just have to wait and see. If we see a big push below, then we'll probably start looking at the 93.15 level, and possibly even the 93 big figure to take out these stops under here, but we'll have to wait and see. So real quick on the euro, same idea. Obviously, we've come into that, there's that same consolidation level on the US dollar. It dropped down, ran all the stops under here. Bulls got back in behind it, started pushing it up, and just came in and swept the highs right above here, as you can see, and even got right above that guy right there. Now, those equal lows on the US dollar that I was looking at, same highs in here that correspond, roughly the same highs. And so what we could see happen, this is a little bit different, but you see in here how we have relatively equal lows under here, here, and here. They could make a push for that. So just keep in mind they could want to run below the 115, and I'm going to make it an even 115.20 just to make it nice and even. If they want to get price below there, I would look for a quick stop sweep, 10, 15, 20 pips, and a rejection, and then a run higher, and that would coincide with the exact opposite. Again, a run lower in here. I'm not expecting that big run up into here for the dollar like I am the euro, just because of where it's positioned, and I mean, really, it's only about 70 pips lower than the current location. So I want to see where it's at and where it gets to. Now, if price fails to get through really this red line right here, about 15, we'll even call it 1580 just to give it a couple of pips here and there, if I can get that on there. If price comes in lower than 1580, I would be expecting, and I'm talking closing on the daily, if price closes below 1580, I would then expect them to run the stops below 115.20. So we're pretty close to that right now. We'll just have to kind of see what happens. Excuse me. As you can see, price came down in here, rejected quite nicely, but now this is the opening. It's technically Sunday's candle at the time of this video recording. We'll see what Monday wants to do. If they want to post another quick run back down and a rejection, great. We'll be looking for them to run the highs back up in here, and I'll be looking for the target long term. But if we close down past 1520, then I'm expecting them to come back down and just simply recapitalize the positions in here. In this small consolidation, 1, 2, 3, 4, 5 candles in here, I'd be looking somewhere around the highs of these candles to get touched back into. And if they want to have any further continuation down, then obviously, if I can get that, there we go. That's what I'm looking for. Then obviously we'll look for them to start sweeping the low underneath here, and if they do that, then obviously we're coming back down in here, and we're going to give up a lot of this range. I'm hoping they don't come down that deep, but we'll have to see. There is that big 79% retracement level down there that they haven't hit, and there's a little bit of a gap right there. So it's all fair. That's all fair game, in my opinion. So we'll just have to kind of see how the week shapes up. I wish I could give you a little more definitive answers on that one, but we're just sort of right in the middle of this range here. So we got to wait until that busts out. Going to the pound dollar. Now, I am looking, I had hoped that we would have seen a real, I'm going to zoom in a little bit here. I would have hoped that we would have seen a nice bounce off this level. So far, price slammed right into it, and this was on the levels that I had on my chart from last week. A lot of confluence at that area. You can see down here, they whipped down, came down into here, hit up some resistance in there, and then we hit it right in there, and we spent 1, 2, 3, 4, 5, 6, 7, 8, 9 or 10 days right at that 130.25 level. You can see on the chart here, this guy's no longer relevant. We can get rid of that. And I was looking to see what they wanted to do. I was expecting them to come down and sweep the stops under this low, this low, this low, and this low. They did that, and they actually closed lower. And so far, they haven't shown any real willingness to go below the 15.25 levels. So, other than a brief wick here. So we're going to see how this week is shaping up. If this candle just starts exploding to the upside, then we'll know that they're defending that level, and that's going to act as support, and we'll see price run higher up this way, and we should see the US dollar correspondingly drop. However, they're convincingly at it right now, so it wouldn't be a very big stretch for them to just fire back down one more time down in here. And again, in terms of a fib, it still could reach down to that 79% retracement level off of this swing low under here, as you can see. And then a swing higher there. So we'll be watching for that one. I'll be honest with you, I'm kind of leaning towards the bearish side on this one. It just price looks really, really heavy right now. And I think if they were going to grab stops and this was just going to be a stop run, they would have done it right here, rejected, and then they would have made another break for this swing high. But it was just a complete failure in here last week, mid last week. That was a Wednesday reversal profile, Monday, Tuesday, Wednesday reversal, Thursday, Friday down close. And it actually finished lower in the week. So if you took a weekly candle and look at it, as you can see, last week was a bearish candle. So now this was a nice hefty push up, a bull run, and they could just be doing a little bit of retracement just to get price balanced back again. So again, I wouldn't want to see them come down any lower than that 79% retracement level, and I will put a fib on there, or not a fib, I'm sorry, a price level on there So you can kind of see what I'm talking about the 29, I kind of like 29.40 as a nice level. If price does come back down to this level, I wouldn't want to see them go a lot deeper than 29.40. Maybe that old candle high. See these two highs right in here, and then there's a bit of a gap in here. I wouldn't want to see them come any lower than that for sure, and that's 29.25. You know what? I guess let me just look at this. 29. Let's say 29.20, and it'll give a little bit of margin for error, just in case. So if they do decide to start cascading down, that would be my line in the sand. If 29.20 gets broken and they close below that, then we're probably going to make another run for this swing low here. And then again, you know, we could be making new lows back in here. So that's sort of what I'll be watching for on the cable, but a little bit too early to tell right now. The one thing I did want to do is really quickly, I only want to talk about the USCAD, and only because we had a big drop in price right here. Look how price opened and gapped down. I was waiting for this for weeks for them to come in. You see how they made the high here, came off the high, came down, made a low, ran the highs in here, and I was short all in here, and I was waiting for them to convincingly come down and really rip lower underneath this guy here, only for them to just to come back up, retrade over the highs here. And I had actually called 13100 level for them to come up, and they missed it by about 20 pips. Actually 19 pips technically on this level here. And look at the reaction there. I mean, just and that was, again, this was Thursday that the price ran up into here, and then last Friday, look at the move that they smashed price down into 180 pip run on Friday. Pretty incredible. And then they gapped even lower on Sunday. You can see the candle. Let me take off the data divider. You can see it a little bit better. You can see this candle right here, opened here, ran back up, rejected off those lows, and now we're still lower on that one. So I've got a level over here underneath these lows that I think they could stretch price into, and we'll be watching for USCAD. So what I'll be watching for is basically price to make a run back up into here, close this gap. We may get a run back up into this price action in here. And as you can see, actually, this was my call on Thursday, London Open. I wanted price to reach up to the 30.40 level. It didn't quite do it. Only got about 30.20 or 30.25, and then just ran off. But I want to see if they have any willingness to get back up here, close the gap at 29.05, and then we'll see if they want to come back up to the 30.10 level. I don't think I think this is it. I think this is for the Canadian dollar. They made their market structure break. They ran down. They didn't let anybody get involved in this run. And I think they're going to keep it that way. They'll probably just have a real brief trade up in here, and then they'll roll it over, and then we'll see prices down in here at 27, you know, call it 27.50 for all intents and purposes. So we're going to be watching this one on the week. I will be looking for this move higher, and I don't want to see it go much higher. Again, I showed you the levels. I don't want to see it go any higher than 31.10. If it does get up there, great. I'll be all over that on a short, and I'll be targeting right down here. That'd be a nice 300 pip move on the CAD. So, and then lastly, I actually posted this signal last week. Just a real quick trade back down into the Aussie, continuation higher. That's what I'm looking for. I'm looking for this as a market structure break, the low in here, trade up, retest on the retracement, and then a trade and a push higher up above these highs here. So if we do get a corresponding drop in the US dollar, then we should see Aussie start to make a break for those highs nice and easily. So that's about it for Forex. Be careful on crude oil. I'm going to hold off for now on crude. My call on crude oil came to fruition when price was trading back here. I was looking for them to move back up into this level up in here. They did that nicely last week, and actually gave it another little push up for good measure. And so far, pretty strong market. They may be interested in taking out the highs here, but I believe we'll probably see a bit of a retracement before they do that. Small gap right here on crude oil. I'm watching that before they take the highs out. Hopefully what they'll do is they'll fall off this level here, come back down, recapitalize that gap, and then do something like that. So that's what I'm watching for on crude oil. Very, very bullish. Not going long here just because it's kind of at the top of a market. You can see the range in here. If this was overpriced, oversold, we're definitely overpriced right now, or overbought, I should say. And look where we are right now. So I'm not buying up there. If anything, I'd be buying potentially down here, and if price wants to get right back underneath this low here, I'd be buying there, but I'm definitely not buying here yet. I want to see a retrace, and then we'll get long on that one. So hopefully you guys took advantage of that crude oil trade I was talking about, and have been talking about for a very long time, because that came to fruition last week beautifully as called. I don't cover this pair, but I just want to show you real quickly gold. If we do see a decline in the US dollar, we could have gold as a nice break to the upside here. So keep your eye on gold. I'd be looking for them to come back down and retest this consolidation and then pop higher from there. Watch this consolidation though. If we break lower under here, if price comes under this line right here at 11, call it 83 or even 1180, I don't go long, but I think that we could see some potential bullishness in gold, and so I'll be watching for this one here. That's about it. The only one other commodity I want to discuss was copper. Same type of idea. This line right here, if copper comes down, retrades to that, tests it, I would be willing to see if they want to break lower than that, or if that's going to act as support, and we could see a bounce from there. And then I'll be looking to see these equal highs up here. Those are the ones that I'll be looking for it to gun for. So hopefully we'll get that. That's it, guys, for another week of trading. I'll be back London Open on Tuesday, and we'll update you again from there. Hopefully this kind of gives you an idea of what I'm looking at and what my thoughts are for the week ahead. And we'll start getting back into this starting Tuesday London Open at midnight New York time. We'll catch up to you then. Hope you guys have a great start to your week. Take care.